Don't worry. Okay.
So one more thing I just want to ask, do you share your screen or it can be done from our end?
No, I can share my screen, no problem.
Okay, sir. Thank you.
Yeah.
Swati, make the co-host to Kailash.
Yes, yes, sir. Done.
Yeah. Thank you. Thank you, sir.
काय म्हणजे तो लाल शर्ट गेलीच बरं काल रात्री घातलेला फक्त रात्री
Gunasundari ma'am, I think we can start now.
Ma'am, let's
Ma'am
start.
will wait. Ma'am will wait. 1 minute. Ha.
Nega, you can start, Nega.
Good morning, all. Before starting today's session, here are some instructions that one needs to follow during the event. I request everyone to kindly keep themselves on mute. To enjoy the nice bandwidth, I request you all to keep your videos off. Please switch on your camera when asked, as we will be having a photo session at the end. At the end of this session, a feedback form will be provided. I request all our attendees to fill that feedback form. A humble appeal to all the attendees, please do not refrain in between the session by unmuting yourselves. Rather, post your questions in the chat box. Even Albert Einstein says, the hardest thing in the world to understand is income tax. And again, in today's webinar, Enactus is helping you to understand more about tax. So let's get started. I, Neharani Mondal, YouTube channel head of Enactus, welcome you all on behalf of Enactus, the Management Club of BSIT, for International Symposium Day 4. In association with Board of Advanced Studies and Research of Institute of Cost Accountant of India. So let's have a glimpse of our alumni of our beloved college BSIT. The Institute's participative culture has always ensured that our alumni are encouraged to stay connected with their alma mater and inspire and motivate current students with the mindset of learn, earn, and return. BSIT alumni seamlessly connect with the institute, faculty, students, and fellow batchmates. Even Alumni Association helps foster interactions and reinforces the bonds between alumni and the institute through activities, programs, and services to nurture mutual beneficial relationships. These are our alumni of BMS department. And I am proud that Enactus is associated with BMS department. Before we start with day 4, let me brief you all about yesterday's session. In yesterday's session, Miss Alicia Stephen, ma'am, talked about what makes a person unhappy while working and how one can make themselves happy again. To summarize it all, one should pursue career that makes them happy and gives them satisfaction. Let's have a glimpse of day 3. So now let's dive into the session. I request Head of Enactus, Professor Abhijit Rani, to address our audience and also to welcome our guest speaker, CMA Kailash Dabulkar. Over to you, sir.
Thank you, Neha. Good morning, everyone. Welcome you all on the Day 4 International Symposium organized by BMS Department with Dalanka School of Information Technology in association with Institute of Cost Accountant of India and Enactus. A person either discipline his finance or a finance discipline him. Acknowledge the quote by the Orion Woodward about the knowledge of finance. We at VSIT aim of this international symposium to provide a global forum that stimulate discussion on the recent trends in management, in finance, in marketing, and HR. So it's provide the platform to our students to recognize and understand the business adaptability and career opportunities. So it's a great pleasure for me to introduce our speaker for today's session from the CMA, Mr. Kailash Dabulkar, a former Chief Finance Officer, Excel Industries India. I welcome you, sir.
Oh.
Yes, sir. Thank you. Sir pursues his BCom honors from ML Dhanuka College of Commerce in the year 1977. He is a member of Institute of the Cost Accountant of India, ACMA. So started his career as a nationalized bank as a probationary officer, but worked for only few months. Subsequently, he joined a public limited company and handled various positions such as head internal audit, head finance, accounts, tax, and so on. He handled various assignments such as mergers, demergers, anti-dumping matters at national level. Successfully, he has implemented ERP system in the organization. He is retired as a Chief Financial Officer of the well-known public limited company Excel Industries India. Sir also contributes his valuable experience in academics. Sir contributes towards the subject like costing for Mumbai University PG level students for the more than 4 years. He is also visiting faculty members for the Dhanuka Institute of Management for 4 years. So I'm sure with his wisdom of knowledge and experience, the today's session of this symposiums give you a wonderful learning experience. On behalf of VSIT, now I like to give a digital token of appreciation.
Thank you. Thank you so much.
Yeah, so thank you, sir. Once again, I'm welcome you, sir, on this digital platform of Symposium.
Yeah. Yeah.
Kindly address the gathering.
Yeah. Thank you so much. Okay. Such a lovely way of, giving my introduction. I'm really delighted and very happy. Hello, everyone. And welcome to today's session. I will try and share my screen so that I will able to give something. Is now my screen visible? Hello?
No, sir. No,
Huh?
sir.
No?
Sir, do you want us to share the screen?
I think you people have done already. Na? I was trying to do this. It's not getting shared.
No, sir, it is not yet getting shared.
1 minute. 1 minute. 1 minute.
Okay.
1 sec. शेअर का होत नाही कळत नाही शेअर का होत नाही मला कुठे पण नाही कुठे नाही
Kailash sir, shall we
Yes.
share the PPT which you have sent it to me yesterday?
that should not be a problem. Okay, but I was just trying to see whether my this PPT is getting shared or not.
Okay, sir. Okay.
Yeah, just a minute. 5 minutes only.
Okay, fine, sir.
Your screen got shared, sir.
Yeah, my screen got shared now. Na? Okay. Yeah, is it okay now?
Yes, yes,
Yeah,
yes.
Okay. Sorry. Okay. He has, Mr. Rani has already introduced me. Now there is no need of giving any introduction of mine. Okay. As you are all, I am all welcoming all of you. Such a nice seminar, nice symposium, organized by VSIT. Okay, it's such a superb way of conducting this seminar. Today, I am presenting in alternative tax regime as a part of your international symposium, emerging trends in global business and silent strategy. I will go very slowly on this, but only one request. While doing this, any queries, anything you have, please put it into a chat box and type them. If I will try to answer all of them as soon as my presentation will get over. Okay. Am I audible properly?
Yes,
Hello?
sir. Yes, sir. Yes.
Okay, fine. That's fine. Oh, that's great. Okay, now let's start. Okay, I'll skip this. My session agenda will be divided into four four slides. Four slides. The first will be introduction to new tax regime. I would like to give you why it is called a new tax regime. Every year in a budget, if you remember, all the time, new finance minister, whenever he presents his budgets, he gives various, various introduction, various deduction, various, incentives for many of the assessees, so that what they can do is they can plan their organization, plan their activities in such a manner that they will definitely able to do something in their financial year. Now, why it is called a new tax regime? If you really see, last 2 years, one is at the corporate level and is at individual level. I will first talk about individual level. There, what they have done is they have tried their level best to give an opportunity to the assessee that whether should they accept this particular thing or not. That means they have given a new regime, new activity which were not there earlier. Earlier, you don't have choice, but you have to follow whatever income tax act or finance ministry says you have to do like this. Now you have a choice whether you should do this or you should not do this. Okay. Accordingly, this entire new concept of new tax regime was best, and therefore it was introduced by Nirmala Sitharaman in the budget 2020 with more tax slabs at a lower tax rate. I will come to that, to a more tax slab and lower tax rate later on. First, I will give small introduction. The new tax regime has reduced the tax slab for individual and HUF taxpayer with a condition to forego certain tax deduction or exemption. What it means is, they said you are allowed to accept a new tax slabs or for individual, provided that whatever deductions or any deduction or opportunities available for you, or opportunities we are available to you for getting your tax liability reduced will not be available. Okay, the reasons which intention of the government to give such type of condition to forego and all, that what they are saying is in a public at large, particularly if you see the individuals, lot of people have got lot of dependency on the either chartered accountant, tax consultant. So in order to not to have more dependency on a tax consultant or a chartered accountants or any other tax professional, what they thought of, they will try and introduce such a sort of a simple way of giving tax regime to the various people. In the process, if you come and see later on, you yourself will realize whether they have simplified or they have complicated or what, but they have done like this. And the importance which has been given to various people is based on your income and what are the allowances which earlier a government has given to you, whether you will take that allowances or not. In the process, they have reduced their tax slab to a considerable extent, so that finally individual will gain. Now individual will gain or not, that we will see in our subsequent slides. In order to give effect to all those things, a government of finance minister has introduced a new section which essentially talks about, if you go and Google it out or everywhere, it talks about a new tax regime. Though that new tax regime has not worded anywhere, but only in the finance minister's speech, they have said it's a new tax regime. And they are introduced from the 1st April 20, and for the relevant assessment year is 21-22. I presume that most of the people here are aware about what is assessment year and what is financial year and how does it income gets accounted. Now, if you really see what I said is, these people have tried to increase the tax slabs. They have increased the tax slab into 5%, 10%, 15%, 20%, 25%, and 30%. It means they have done a 6 tax slab vis-a-vis what was there in an old tax regime, which is continued. It has not been discontinued. It is only 3, 5%, 20%, 30%. Now, tax slab which has been given here is for an individual, and I'm talking about for individual, but also applicable to HUF also. HUF is Hindu Undivided Family. That also, they have done is up to 2.5%, both are all individual HUFs are happy, no tax. The next slab, also they did not make any changes between 2.5 lakhs to 5 lakhs, 5% and 5%. Now, what they have done, a income which is exceeding 5 lakhs. Okay, they have tried to divide between new regime 5 to 7.5 lakhs, 7.5 lakhs to 10 lakhs, 5 to 7.5 lakhs at 10%, 7.5 lakhs to 10 lakhs is 15%, and 10 to 12.5 lakhs is 20%, and 12.5 lakhs to 15 lakhs 25%, which was 20% up to 10 lakhs in the old regime. Again, I am telling you, old regime is not discontinued; it's still going on. It is not something they have stopped or they have cancelled. It still continues. And if you really see, about 10 lakhs, the income was taxable at 30%. Now, this is basically giving a lot of complications, and though they say it's a very simplified kind of thing, they are trying to see that you will get a lower tax obviously. But what are the reasons? What are the conditions? So let's see. If you really see, in my slide, I have said in the old tax regime, tax rate varied on the basis of age group. If you really see, in the old regime or old tax rate, they have given a lot of recognition to the senior citizen, which is above 60, and super senior citizen or very senior citizen, which is above 80. Now, in new tax regime, they have not made any distinction whatsoever between senior citizen, very senior citizen, and a normal citizen. What they are saying, all are on equal footing. I really do not know why such type of distinction they have made, but this is what it is. The key takeaway is, though they have 6 slabs and vis-a-vis 3 slabs, the thing is you have to see, because 6 slabs will not give any importance or any thing based on the age, but it will be applicable to across the board. Okay, now, next para, whether what are the conditions to offer new tax regime? As I earlier told you, that new tax regime basically is applicable to all the individuals and HUF. I'm talking about only individuals and HUF just now. I'm not talking about corporate. Corporate will come later on, but all this applicable. They said, okay, fine. I'm going to reduce the rate of tax from say 30% to a various tax slab which I have given. That tax slab you will be entitled to enjoy, provided. Just see what is it. Just provided you have forgo the exemptions and deduction under various chapters and sections of the Income Tax Act, which I will give it down, which are being given below, in the sense that yes, you will be entitled for a 5%, 10%, 12.5%, and 15%, all such tax slab which have been given, provided individual has to forgo. Now, this is, if you see the individual, if you take a very statistic into account, very few of the individuals having a business, they are all salaried people. Okay, now what they are saying is, if they wanted to go for such type of new tax regime, they will not be entitled for getting any deduction in respect of leave travel concession as contained in the clause 10 of section 5. I have given the section 10.5 because suppose in case somebody wants to refer the 10.5, they can refer. It was like this, in a block of calendar of 4 years, twice if you go to any of the native any of the place outside India for the purpose of leave travel, the entire income to entire money which has been paid by the employer to the employee for the purpose of going to this, that place, was taken as an exempt to the extent what he has already spent. So therefore, this particular thing was given. A lot of people used to travel various places and they incur expenditure and all such type of thing, and that expenses was considered as an exempt. You are entitled to get new tax regime, but you will not get this particular benefit. This will not allowance. You will not get. Similarly, house rent allowance as contained in section 1030A, if you really see, the company always pays a house rent allowance to the various employees. At the same time, in a metro city like Bombay, Delhi, and all other places, they also, instead of buying the flat, they go on taking on hire, or they are taking on the rent, and they also pay a good amount of rent to the landlord. What is to happen is that particular rent what they are paying, subject to certain rules given in the Income Tax Act, one can see from 1013A, they are entitled that entire house rent allowance which is being paid to that employee is considered to be exempt. But now if you go and opt for a new tax regime, what is happening is they say, no, you will not get entire whatever house rent allowance been given to you has to be offered for tax. Why? Because your tax slab, finally, what we have done is been reduced. And therefore, one has to really see whether that will help you or not. Now, some of the allowances as contained in the clause 10 of section 14 also talks about this particular allowances. Earlier they used to give a very good amount of allowances to be taken as an exempt for the purpose of the employee. And therefore, ultimately, whatever amount of salary they used to get, a chunk of salary they used to get by a tax-free allowance. So that also said that you will not get me. That means any allowance, anything which you are giving will be tax-free. Next is MP, MLA. I think we will not talk about that much. Okay. Then there is allowance for income. Some of the company they should give allowance for income as contained in the clause of section 10. What they say is up to rupees 1,500 given to each minor child will be exempt. That also will not go. One of the most important thing or conditions to opt for a new tax regime, that standard deduction which you all know, and the employment and a professional tax which has been deducted at 2,500 and 50,000 to all the employees, all the employees, that deduction you will not get. Okay, now if you remember, if you see really the history of that standard deduction was introduced by the government long back, just to take into account there are certain expenses which is incurred for attending the business, attending the office of the employee. Okay, unfortunately that has been changed, that has been go on doing this, and again they have reintroduced, and right now they are saying up to 50,000 you will get. But if you opt for a new tax regime, the question of getting that deduction will not arise. The next point is, see, the condition for tax opting for new tax regime, if you take into account all those things, that means absolutely you don't get any deduction. Okay, deduction which hitherto you were getting, now absolutely you don't get any deduction. Now another deduction was if you go and take a house property in a metropolitan region like a Mumbai, Delhi, or anything. Normally what happens is a younger generation of 27, 28 people, they go and borrow from the various financial institution or various banking or from their employer. What happens is, they have to pay a huge amount of interest, and at the same time they also pay installment repayment. Now both the things were allowable deduction under section 1 is under section 24(1) and also under section 80C. Now both the things will not be allowable for the employees or an individual if they opt for new tax regime. Moving to the next. Okay, moving to the next, and just to give a summarize, if the taxpayer choose the new tax regime, he cannot claim most of the deduction and exemption which were enjoyed in the old tax regime. So it will be an opportunity loss for the taxpayer, as he will not be able to enjoy the benefits which I have already given in under the BC. Now look here what happens. The deductions which we are getting earlier in a old tax regime is a form of an investment. You really see, this is something one has to apply their real mind. Earlier, whatever used to happen, for example, contribution to provident fund, okay, then contribution to the superannuation fund, or say contribution to the various scheme which is covered under section 80C. Look here, a life insurance premium, it is not for the purpose of tax, but it's for the purpose of your risk. Now those things of an investment, it was not at all related to any other thing, but that benefits you will not get. So one individual has to keep their thing in the mind, whether he should go for a new regime or he has to go for a existing old regime. He has to work out separately. Let's moving to the next slide. Choice of a new tax regime. The choice to select tax regime, which I have already mentioned to you on year-on basis, is available to the taxpayer. Income from salary, house property, capital gain, and other provision. Let me just try to elaborate on this. This new tax regime can be given to the particular individual or an HUF, okay, year-on-year basis. What it means is every year you have a choice whether I should go for a new tax regime or whether it is on old tax regime. Today I thought I don't have money to spend it to getting deduction under section 80C, which is 1,50,000 by way of equity saving scheme by mutual fund or public provident PPF or a PF or all the or LIC and all. So I can switch from one regime to a next regime. Or sometimes what happens, I have all this, for example, today I have already made a lot of investment, and my investment, which is the all deduction which has been given in the income, while computing the income, and my tax liability because of that, it comes very low as compared to the new tax regime. So people can opt for this. So they have a flexible kind of, what is new tax regime? This talks about a flexibility for an individual or HUF to a flexibility for individual and HUF to see that it will suit their own needs to reduce the final tax liability of an individual. Okay, now this what they are talking about. It will not require anybody's help, like a tax consultant and any other tax advisor or a chartered accountants or maybe to the extent cost accountant also who are specializing in tax. It's in a normal person, it's a normal individual or a common man. it will be difficult for him. I can give you an example of my own brother who was a branch manager for a number of years. He was finding it difficult for him to understand this. So therefore, I really do not understand why such type of thing, simplicity completes into a complication. Now one more hitch in this, see, salary, house property, capital gain, and other sources will be entitled to make changes whether you go for a new regime or not. However, if taxpayer has an income from business or profession, he cannot select tax regime year-on-year basis. Okay, now here only I would like to clarify this. In first sentence, first line, what I said is from salary, house property, capital gain, or other sales. He also may have profits and gains of business. For example, share business. I'm doing a lot of share business of futures and option. That business is considered to be a business income, and I'm getting a lot of business income. In that situation, also he is also allowed to take, but he cannot change on year-on-year basis. So people are getting slightly confused in the state that if that particular person having a business income, okay, he will not be shifted to the what is called is new tax regime. Yes, he can shift it to a new tax regime, but he is not allowed to make changes in year-on-year basis. This is what this particular talks about. The new tax regime does not encourage investing habits, as I just now mentioned, in taxpayer. It is better for the taxpayer who have less income and less investment, resulting in a lesser deduction and exemption. See, what it means is you have to do a lot of working and computation. You have to see what is money available to you as an investment, which is to be done, which is to be taken into account in the future, this thing, okay? All this, ATC benefits which have been introduced earlier 15, 20 years back or 15 years back, the intention of that they should do an investment which is for a future ledger. If Provident Fund is for future, LIC is for risk, and then another thing is also, for example, you take a house property and pay a 100 lakhs, 1 lakh as a a repayment of loan. That all should come as a part of an investment. Okay? So if you really see this entire new tax regime, each individual must evaluate which tax structure is best for him depending on his income level and deduction, so that he can choose the most suitable regime accordingly. What here I would like to do is, it is not so simple that, okay, I will go for this new tax regime. No, it is not decided. You must calculate that new tax regime will definitely help me in my computation. And finally, what I will try to reduce my tax liability. The factors which is necessary to choose the new tax regime is whether assessor's income is only from salary, or it will include income from other heads later in the current financial year, that is between 1/4/2020 and 31st March 2021. If assessor is expecting his income from other heads for which the amount cannot be determined in the beginning of financial year or any time before the end of the relevant financial year, then assessee should not make hurry to obtain the tax regime old. Now see, this is very, very simple thing, because salary, though every month you will get the same amount of salary, but there are certain income, for example, capital gain. Okay, let's take for example a bonus. Let's take for example incentives. Okay, performance incentive, which is not known to you at the beginning of the year, which probably you will come to know at the end of the year. Under that situation, what happens is, you don't decide at the beginning of the year. Department, that is very nice on the part of a government. They have said, okay, fine, you may decide in the beginning of the year, but at the end of the year, you must see what sort of an amount, what sort of an income you have received, what sort of an income you are going to receive at the end of the year, and accordingly, you take a call whether you want to go for old tax regime or a new tax regime. See what happens, they are allowed you to make an investment also up to 31st of March. Sometimes they give some extension, but 31st of March. So on basis of that, they will tell you whether it will be advisable, whether it will be beneficial for an individual to give such type of thing. Now, I have given some example of like the bonus and performance, etc., for which employee don't know the exact amount which is expected to be received in the mid or by the end of the relevant financial year. So income is variable factor while opting old or new regime and must be considered and properly analyzed by the assessee or an individual. Now, next is which I have already talked a lot, but I thought I will just give you by way of my slide. Before opting the old or new tax regime, assessee or individual or HUF must review all exemption deduction which are to be aware by him, like number of exemption, deduction, quantum, amount of exemption, deduction, and their impact on taxable income. That is, whether is there any change in slab of his income such due to exemption and deduction. So in a very simple word, you must try and compute in a both side. One, by taking into account exemptions and deduction because of various investment you made, and one side you don't take into account that. And what happens is, and you can see and try and see what is the amount of tax liability if you don't take that exemption into account, and if you take that exemption into account, what is tax liability and which tax liability is lower compared to this, and then you choose. And therefore, a government of India has said very, very clearly that you must decide this. And now they have made a lot of arrangement also in a new portal of income tax, that they have said, various this thing, you must decide before filing the return of income whether you will do it or not. And for individual, they have said, okay, fine, this year you have made a mistake, you can always change it later on. Only I'm not sure whether you can revise that income and make the change or not. I'm really not sure. I'm just trying to examine it. We will see later on. Today I have made a mistake and I said, this is what it is. But subsequently I realized, no, it is not that. So I can revise the return and go to a new tax regime or not. I really don't know just now, but we'll check up later on what happens as well. Okay. Now, similarly, I have said about section 24B, which is housing loan and all. So I will not go more on this. Okay. Now who can opt for it? That I have already said. Any individual can opt for the new tax regime, meaning that is to say the new regime is an optional regime, and individual taxpayer can choose between the old and new tax regime. Further, the taxpayer earning income from business has opted for the new regime for any year and later on withdraws it any subsequent year, cannot opt for the new regime again and has to follow the old regime's tax slabs only. However, other individual taxpayer can choose between the regimes every year, in the sense that a person who is having a business income, an individual having a business income, and he claims he goes into a new regime and subsequently withdraws. No, I do not want to go because I incurred a loss. Therefore, loss I should get such type of thing in this. So I will be better off in my old regime. And once it changes, then he will not allowed to go back again to new regime. This is what our present law talks about. Now, see, the department also says that it has to be given a lot of simplicity to the individual, simplicity the various people, so that they can compute a tax liability under the both old tax regime and new tax regime, and therefore they have given a ready-made calculator. Now I do not know whether it is available or not, but it's earlier it was available. IncomeTaxIndia.gov in this. Please try and go and see in the income tax regime before filing the return, because return filing date they have extended to 30th of September. People gets a lot of time to see whether you do like this or you do like that. Individual has got a option to do in this year and can change in the next year, and whatever this thing that you plus go and see in this, so you will get a good amount of knowledge. Okay. Now just I made a small comparison so that people can understand. HRA and LTI exemption under section 10 old regime, it was exempted, but new regime it is not exempted. ATC investment like a provident fund, PPF, tax saving, yes, no. If you ask me frankly what I am going to do, of course I am not now salaried man, but I am advising the people that better to go and take ATC investment and all, because it's a future this thing. It is not something that you have to finish it in the 1 year, but this investment helps you to take into account a future, your future generation and all. Medical insurance premium, which is section 80D, old tax regime, used to get deduction under section 80D, but new regime also they said no. Housing loan deduction and interest payment also in a new regime, you don't get anything. Standard deduction on salary and professional tax also you don't get in the new regime. Old regime, yes, you will continue to get. Standard deduction under section 24 of 30% in respect of rateable value. This is for computation of income from house property. There, old regime you will continue to get 30%, but new tax regime you don't get. Rebate under section 87, yes, fortunately they have kept both the rebates are available. And benefits of lower tax, of course, I said old tax regime, no, and new tax regime, yes. Whether benefits of lower tax, unless you compute like this, unless you yourself see that whether this new tax regime is getting you a benefit, then only you must switch to new tax regime. Of course, the statistics are right now not available because this is the first year which we are, government is also trying to find out whether this new tax regime is been accepted by the people. Most of the retirement people, where they are not basically go for an investment in a various like ATC, HRA, medical insurance, they may not get, but the thing is such type of thing, they may offer that, but such people are very few in numbers. They are not very large in numbers compared to the individuals which are filing this. So coming back to the next, here are 70 exemptions and deduction. You won't get. I have this. There are total 70 exemption and deduction, but I have taken only into account which are commonly used by the various people. First is standard deduction 50,000. You won't get. House rent allowance depend on salary structure and rent paid. Housing loan interest rupees 3.5 lakhs for affordable housing, rupees 2 lakhs for others. Investment under ATC 1.5 lakhs. Leave travel allowance, which I already said. Tax free if claim once in a block of 2 years. NPS contribution 50,000. Medical insurance premium 25,000 for individual and 50,000 for a senior citizen and the parents. Saving bank interest of 10,000 and interest income for senior citizen rupees 50,000. Section 80 TTB. So if there will be a list of exemption, but I have just taken out which are basically commonly used by the various people, and these have been listed out. So coming back to further education loan interest, those people who goes abroad, they borrow from the various financial institution and they pay the interest, and the interest is earlier it's allowed deduction for individual, but those things also you will not get. Okay, then hello, can you hear me?
Yes, sir.
Yeah, okay, no problem. No? I can go ahead, no?
Yes.
Disability of self or dependent rupees 75,000 to rupees 1.25 lakhs, depending on disability. Treatment of self or dependent for specified disease of 40,000 and donation to a specified entities 50% or 100% of the amount donated. Now, all those things deduction will not be allowed in your new tax regime. So therefore, one has to really work out what is the tax liability you will get if you go and opt for a new tax regime. Now, while doing so, the Finance Ministry has not touched the following this thing: standard deduction on rent or the rent received, agricultural income they have not touched, income from life insurance that insurer cover is 10 times the annualized premium, they have not covered. Retrenchment compensation rupees 5 lakhs, they have not covered. VRS proceeds of rupees 5 lakhs, they have not covered, and leave encashment at the time of retirement rupees 3 lakhs. Now, just to give some small, comparison and 4 types of scenario which I have taken out for the purpose of doing this comparison, which will help all of you to do this. See, if your income is 10 lakhs, then an exemption is 4.25 lakhs. Now, exemption 4.25 lakhs consists of, if you see the down, I have said standard deduction 50,000. This is basically applicable to the salaried man. ATC is 1,50,000. Deduction under section 80D is say 25,000, and home loan interest is 2 lakhs. So 4,25,000. My taxable income comes to 5,75,000 in old regime, and my total tax comes to 28,600. Now, see, suppose if I go to the new regime, what happens? My income I'm keeping the same, but I don't get any exemption deduction which I enumerated down, which will be 0. So therefore, total tax is 78,000. So under these circumstances, people can always say, no, I will not go for a new regime. I will go only for an old regime. Why I am giving you this example? Because unless and until somebody does such type of working, it is not possible for anybody to conclude whether I should go for a new regime or old regime. Now let's take back into it. Let's go to a second scenario where my exemption deductions are not so high. My income is same, 10 lakhs. Exemption and deduction is 1 lakh. Only I have done for ATC. Okay, my taxable income is 9 lakhs, and new regime become a 10 lakh because I don't get deduction of 1 lakh. Total tax, which under old regime comes to 96,200, and new regime comes to 78,000. So if you really see, the income is 10 lakhs, but your exemption deduction are not so high, then it is better to go for new regime. Yes, we should always go for a new regime, but such working one has to do. Now, this is a two scenario which I have said. I said, now let's see under income which is there at 25 lakhs. Here also I said like this only, the income is 25 lakhs. Okay. The exemption is 4,25,000 in the scenario 3. My taxable income comes to 20,75,000 and total tax comes to 4,52,400 and new regime comes to 5,07,000. Now look here, this exemption and deduction what you are claiming here, out of which most of the deduction, like for example ATC and home loan and all, this has gone as an investment. Interest on the housing loan which you are paying because of, you know, you are investing in a property. 1,50,000, which is basically talks about PPA, provident fund, then equity saving mutual fund, all such. So these are all basically investment. Now look here, the new regime you are paying more of tax, and in old regime you are paying less of tax, and therefore you have to make such a type of a comparison which will help us. Now same thing if you replicate here. Okay, now the old regime you will be paying 5,53,000, but new regime you are paying a 5,07,000. The same thing which I have taken. Only thing is what I did was 1 lakh rupees instead of investments are low, so I have taken this. So I will be paying more of this. So one has to really make a choice between these two, whether such type of thing should be there or should not be there. Okay. Now let's go to next. Now, just now I spoke to you all about individuals and HUF. Individuals and HUF. Now, what happens is, you know, this new tax regime was introduced 1 year prior to this year. Okay, this is why I am calling it a new tax regime again. The same thing they have done for various companies. Okay, various companies, they can go and opt for a new tax regime. Now, this talks about the section 115BAA. You know, they have to introduce some new section whereby they can follow that section for the purpose of applying this new tax regime for corporate. Now, section 115BAA was introduced by the Government of India through the Taxation Amendment Ordinance 2019 on 20th September 2019. Several amendments are made to the Income Tax Act 1961 through this ordinance. Changes such as corporate tax rate cut for a domestic companies and as well as for a manufacturing companies was announced. And also the MAT rate has been reduced from 18.5%. We'll come to the MAT rate. I will try and give an explanation of MAT. But you see what they have tried to do is, you instead of paying, and nowadays, you know, if you see the domestic company has to pay a tax rate at the rate of 30%. Now what they say is you will get really a corporate tax rate cut. That was a demand for various industries that you should reduce the corporate tax rate cut, which Ministry of Finance has agreed to it, and they have reduced the tax rate. But now let's see what happens. The new tax rate was introduced in the Income Tax Act to give the benefit of a reduced corporate tax rate for the domestic companies. Section 115BA states that the domestic companies have the option to pay tax at the rate of 22% plus surcharge of 10% and cess of 4%. If you see, the rate of tax was 30% plus surcharge of 10% plus cess of 4%. The surcharge depending on the income and all, but we'll keep it as a 10%. So it is from 30%, they are reduced to 22%. What they have said is, yes, we will agree to what industries are saying and we will try to reduce the corporate tax. If you see the effective tax rate being 25.17% from financial 1920 onwards, if such domestic companies, again, if such domestic companies like individual, like such domestic companies adhere to certain conditions specified. The company under that, if the conditions are specified has been adhered to, that company need not pay under MAT if it opts for section 115BAAA. You see what is MAT? MAT is in case there is a income which is negative, in the sense that while computing, there is a profit as per income, as per Companies Act, and income as per Income Tax Act. If my Income Tax Act become a negative, in the sense I don't have to pay any tax, what it says is you have to calculate tax as per profit and loss account. Profits of that particular year, they have given some small deduction and addition. Amount of that amount of profit which is there, you have to pay minimum alternate tax. That much minimum tax you have to pay for the purpose of paying the tax liability. So this is what MAT. But what it says is, suppose if you opt for this, the MAT will not be applicable. Now, here the condition for eligibility of 115BAA. All domestic companies shall have an option to pay income tax at a rate as applicable and says, provided the following conditions are complied with. Now, if anybody knows about a corporate tax and well and good, suppose if somebody doesn't know the corporate tax, he has to follow an Income Tax Act where it gives a lot of allowances and deductions and benefits for computing the tax liability. Now, what it says is the domestic company shall have option to pay income tax at a rate as specified under this, provided the following conditions are complied with. Claiming a deduction under section 35 for expenditure on scientific research or an amount paid to a university or research association or national laboratory or IIT. What it says is, if you make any expenditure for the purpose of R&D, scientific research, or you contribute to any laboratory which is meant for a scientific research, or maybe institute or IIT, that amount earlier used to get a deduction from the purpose of a computation of income, but that you will not get. Similarly, claiming a deduction for the capital expenditure incurred by any specified business under section 35 AD. Claiming a deduction for the expenditure incurred on an agricultural extension project under section 35 CCC or on a skill development project under section 35 CCD. These are all the benefits, all the allowances, all the incentives which were given to the domestic company to see that they're, out of their profits, they give such type of importance to the skill development or skill development project or agricultural extension project, so that they can reduce their tax liability. Then claiming the deduction for the expenditure incurred on agriculture, again same thing, claiming deduction under chapter 6A. Now, this is most important thing, like claiming deduction under chapter 6A was totally withdrawn if you are going to claim eligibility under 115BA. In respect of certain incomes which are allowed under section 80IA, 80IAB, 80IAC, 80IB. I'm not taking in detail because it takes a lot of time and so on, except deduction under section 80JJA and 80M. Now the condition for the eligibility of 115BA, claiming a set-off of any loss carried forward or a depreciation from earlier years if such losses were incurred in respect of the aforementioned deduction. See, what it says is, if there any expenditure or any allowances which has been enumerated above, including the depreciation, is not, your income is not sufficient to absorb this deduction, then the old regime or earlier, it is allowed to be carried forward for the next assessment year. But if you do this, okay, then you will not be allowed to these losses incurred in respect of the above mentioned product, you will not be allowed to be carried forward. A claim by an amalgamated company for set-off of a carry-forward loss or unabsorbed depreciation belonging to an amalgamating company, if such loss or unabsorbed depreciation is on account of the above deduction, claiming a deduction for an additional or accelerated depreciation, the normal depreciation can how be again. In case of amalgamation, if you see the provisions of amalgamation, there are a lot of amalgamating companies' losses and all this allowed to be carried forward and allowed to be adjusted against amalgamating company. But unfortunately, this also they are saying will not be allowed to do this. The above losses shall be deemed to have been allowed and shall not be eligible for carry forward and set off in subsequent years. This means that if the company opts for 115 BAA, then the opportunity for claiming set-off is lost forever. This earlier, these losses of, in the nature of depreciation unabsorbed, then 35, section 35 losses were allowed to be carried forward for 8 years. That means that if your income is insufficient in the current year, that and is not sufficient to absorb these losses, that losses were allowed to be carried forward in the subsequent year. And if the subsequent year you have a good amount of income, okay, that losses can be set off against this income. And therefore people always used to prefer, suppose in case if this year, because of say today, because of this pandemic condition, the company is not doing well, therefore they are all these allowances were unabsorbed because there are no profits. In that such situation, what happens is, they used to carry forward this deduction. They used to carry forward these allowances to the next financial year, where if they have good amount of profit, they will definitely adjust. In case if they are not having that profit in that year, they also subsequently carry forward for a period of 8 years. But when you offer 115 BAA, it will not be allowed to be carried forward for the next assessment year. So such company will have to exercise this option to be taxed under section 115 BAA on or before the due date of filing income tax return. That is usually 30th September of the assessment year. All those things, again, government has given an option to the people, option to the domestic company. It may happen that at the beginning of the year, they may feel that, no, I won't go for new tax regime. But once this everything will get settled out at the end of this, they say you don't decide in the beginning of the year. You may decide for some XYZ reason, but after completion of the year, if you find that particular tax regime is not good for you, then what you can do is you can always go for a existing tax regime and new stuff. But you have to decide before filing the return of income. The option, and then they are given some procedural kind of thing. They said that you have to file a form 10IC. Why I am mentioning this form 10IC, and many of people may know, okay, what is to be done if you want to accept like this. So they say that 10IC, they have made a lot of arrangement in the new income tax portal also to do filing of such type of thing before completion of before filing the return of income. Here, there is no restriction. Earlier, they have kept some restriction of 400 crore or something else. There is no restriction on turnover, and the company need not be a new company. Any existing company can migrate into this section at any point of time. Let's go to the second next slide. The new effective tax rate, which is 25.168%, is 22% is basic tax, and 10% surcharge, 4% cess. Total comes to 25.168. Vis-a-vis basic rate is 30%, 10%, 4%. Calculate this, you will save something like more than 8 to 9%. So many of people, they tried and worked out whether that is beneficial to us or this is beneficial to us, and finally then they decide what action to be taken. Now, key pointers: domestic company opting for 115 BAA will not be able to take a credit for taxes paid under MAT during the tax holiday period. The companies would not be able to reduce their tax liabilities under the section 115 BAA by claiming MAT credits. The CBDT may issue any clarification for MAT. If you know MAT, I will try to, otherwise I presume that how the MAT credit gets carried forward. If you have anything, you let me know, because MAT subject is by itself is a big thing. So it takes a lot of time for it. So I have just put up this slide whereby I say that it's a MAT credit, you will not be entitled to grade. Domestic company opting for 115 BAA shall not be allowed to claim set-off of any brought forward depreciation. First of all, they are not allowed to claim additional depreciation. I will just give you the example of this. A domestic company who incurs a capital expenditure during the year, they get a normal depreciation of, say, I'm just giving the hypothetical example of, say, 30%, that is 15% plus 15% is normal shift and 15% extra shift, okay, or 30%. But in addition to that, they also entitled under section 32(1)(2)(a) additional depreciation of 15% for computing the deduction benefits for getting more depreciation, so that, because of this technological improvement, you can write off your asset faster. But once you opt for this 115 BAA, you will not be under the new tax regime. You will not be entitled for that deduction as additional depreciation. There is no time limit for the domestic company to choose. This is most important kind of thing that one should really think. There is no timeline for the domestic company to choose a lower tax rate under 115 BAA. So such companies can avail the benefit of section 115 BAA after claiming the brought forward losses on account of additional depreciation and also using the MAT credit against the regular tax payable if any. Now I'll try slightly touch on this particular slide. See what it says, what the 115 BAA says is it will be applicable to all the domestic companies, existing or new. Now what happens is, in an existing company, there may be a lot of carried forward losses, or they may be a carried forward MAT, that is MAT entitlement credit. Now you have a choice whether you can exhaust these losses and MAT entitlement credit and then go for a new project. Yes, you can do this. And therefore, if people having a lot of carry forward losses or unabsorbed losses or unabsorbed MAT entitlement credit, they can always defer the decision of going under 115 BAA, since that will be more beneficial for those people because they will able to absorb earlier year losses to take care of a future years this thing. Now, people may ask, I can do all those things, but can a company opt out of this section? A domestic company who do not wish to avail of this concessional rate immediately can opt for the same after the expiry of their tax holiday period or exemption or incentive as mentioned in point 2 earlier. So what I said is, domestic company can opt anytime, not today. If suppose we find it today because my losses and MAT credit entitlement are still, I have not utilized it. So therefore, what I will do is I will utilize in this year and then I can go it for the next year. Yes, you are allowed to do this. But however, once such a company opts for the concessional tax rate under section 115 BAA of the Income Tax Act 1961, it cannot be subsequently withdrawn. So they are very clear in what it says is, once you accepted this, then you cannot go back to our old tax regime. So you have to be a very conscious, very thoughtful. You take into account your future this thing and then decide about 115 BAA and see whether you are getting benefits or not. But if you ask me frankly, yes, there is a lot of benefit also to shift it to the new tax regime, because if you see this, the provisions of section 35 which has been contained, they are very cumbersome provisions. For example, if you want any deduction for some scientific research, you need to go and make an application through a DSIR. Okay, DSIR will approve. DSIR will approve and they will give your expenditure and they will give 150% deduction or whatever amount. But there is a cumbersome process to go and do this. So therefore, one has to be very, very, clear and categorically, do and note it down whether this will be applicable to me or not for doing this. Now I come back to my last slide. In case you have anything, a question answer, please, I am free to the extent possible. I will try and reply to your question answer. Okay, and anything if you want to know, please ask me. Thank you so much. Okay. Can you take over, ma'am?
Hello, sir.
Yeah. Can you now
Yes,
take over? Yeah.
Yeah,
Any
yeah.
question answer? I will try and reply.
Yes, sir. There are some questions in the chat box.
Yeah.
So the first question is the finance ministry trying to abolish the old tax regime? Continuing the same question is asked. If so, what will be its consequences?
No, I don't think it is possible, because it's not going to be. That was not the intention of reducing, but they will try and more goes into a new tax regime, but they will not reduce. They will not abolish abruptly. This is what my personal view. Please take this into account. It's my personal view. Okay, the other views may be different, but they will not do. But over the period, they wanted to get yourself reduced.
Okay. So there is one question. Is there any GST benefits for the startups under the government initiatives like the Startup India?
This is an income tax, this thing, a GST. It's not correct on my part to give a reply on this particular question. But yes, startup, there are some benefits have been guaranteed by the GST. Okay, I may not have that much clarity on that particular subject because it's a income tax, not a GST.
Okay, okay. There's one more question. This respondent is asked, can I claim deduction for my personal and household expenditure while calculating my taxation
It is
income on profit, income or profit?
This is not allowed at all. No personal expenses are being allowed while computing the income tax liability. No personal expenses. Okay, you can make a jugglery by saying that in your profits, while computing, if you have business income and certain expense, your personal expenses, like I'm using my residential house for the purpose of my business. Okay, so 50% of electricity expenses I can take it into business and can claim, but no personal expenses is been allowed for any reason. In fact, if I want to elaborate on this subject, I am using a car. Okay, for example, I am using a car for my business purpose. Entire expenditure of a car, like a petrol, driver, and all such type of thing, department takes the stand that entire expenditure you cannot allocate to the particular business because there is a part of element of personal expenses are always there. Can your wife is not traveling in that? Yes, your wife is also traveling. So it is certain portion of this. So therefore, what they do is, suppose the expenditure is 10,000. They say, no, 25% you allocate to your personal expenses. So therefore, no personal expenses in the income tax has allowed us to give a deduction like this. No.
Okay, sir. So one more student, Shruti, want to ask, what assets qualify for instant write-off?
What assets qualify for instant write-off?
Yeah.
Can she elaborate the question?
Shruti, can you please elaborate? So by the time we take the next question, sir.
Yeah.
This is want to ask, will this option in regimes affects government income positively?
Or I see just now, as I told you, it has not yet been no statistical record just now available because it is started in this year only. Okay. Now, if you ask me, frankly, my frank opinion is this. My frank opinion is over the period, yes, it should give a positive reaction. It should give. Of course, just now, nobody can say like that because not a single return has been filed except those people who has a no investment kind of thing like ATC and all, those who have opted for tax regime, which is basically senior citizens, senior citizen or very senior citizen. For those people only, that will be more advantage. And no statistical things are available. So we'll have to wait and watch whether really it will be workable or not. But over the period, yes, I feel it should give some positive response. But
Yes.
intention of, if you didn't know, the intention of the government is to reduce the taxpayers, what do you call, interference of tax consultant and all, which I have my own doubts because a lot of people in India, they have not yet still properly focused on tax provisions, and therefore it creates a difficult for those people. Even most of the companies who deduct the tax at source on salaries, they also are not very clear. So let us see, let us wait and watch because it's the first year, no? That's why.
Okay, sir. So Janvi want to ask,
Yeah.
will you please more insight into MAT credit applicable for corporate?
See, I will, first of all, I will just try to give you what is MAT credit. Okay. Now, in any particular year, okay, if company during that particular year, after claiming the various deductions and allowances, income is not taxable. What I mean is income falls below the threshold limit of paying tax. Then what income tax people are saying that you have to pay a minimum tax. Therefore, they call it a minimum alternate tax. Now, how do you calculate a minimum alternate tax? Then you ignore the entire provision of computation of income tax as per Income Tax Act. Okay, computation of total income. Then you have to go to the what happened in your profit and loss account. Okay, therefore they talk about profit as per profit and loss account, as shown in the Schedule 6 to the Companies Act earlier. Now it is Schedule 30, Schedule 3 of the Companies Act. Now on that profit, they have given certain additions, and there are some deduction you have to do separate add. Then you find out, okay, what is the amount of profit left. In that profit, you have to deduct, you have to charge a 17.5% rate of tax for the purpose of MAT. Now see what government is saying. You are not paying any tax as per Income Tax Act, but you are paying as per MAT. So whatever amount of MAT you have paid this year because of the following the provision of MAT, that amount of MAT is allowed to be set off, because strictly Income Tax Act does not require you to pay anything. But still you have paid because of MAT provision. So because the government wanted the money, so they have taken the money. But that money, that MAT amount, you are entitled to get a credit in the next year. That is called MAT entitlement amount. So that is MAT credit which you can set off in the next year. Am I clear?
Yes, sir.
I don't know because it's required a lot of
technicality.
And one-to-one analysis, one-to-one sitting, and then because we spend a lot of time on doing this MAT and all, so therefore it takes some time. But once you read it, now you will understand. Okay, logic is the same.
Okay, sir.
Yeah.
So next question from Rabab. She want to ask how to round off the tax liability.
That is the name. See, the tax liability should be round off the next thing. Tax liability round off, no? She is saying.
Round off.
Round off is thing. Suppose if my tax liability come to 1,813, so you can round off to 1,810, or you can, if it is 1,870, same simple rules of our mathematics should be followed. If it is more than 15 or more than 5, it should be rounded to the next. If it is less than 5, it should be rounded to earlier. They say.
Thank you, sir.
Yeah.
So next question from Prathamesh. We want to ask, what about advance tax payment under the new tax regime?
The provisions of advance tax payments are not being changed at all. Okay, you will have to continue to give the same thing if your tax liability for the year, whether you follow new tax regime or old tax regime, exceeding rupees 1,000, exceeding rupees 5,000, then you need to pay tax. You have to pay tax. So advance, you have to pay by way of advance tax. And now in a many of time, what happens is, these all individuals and all people, they are under a salary, so they take into account the salary, get a TDS deduction. Now advance tax liability comes after reducing TDS liability. So many of people, their tax liability may not exceed 5,000 as far as individuals are concerned who are a salaried man, unless they have a huge amount of other income or a capital gain and all such type of thing. Then they have to follow the section 209, where you have to pay advance tax as per provision of Income Tax Act. So tax provisions are not being, advance tax provisions are not being changed because of this. Is it okay?
Yes, sir. So the next question is from Sahil. We want to ask, sir, do you think there will be any impact of this alternative tax regime on the tax evasion?
I'll tell you.
Okay.
This is again, I am telling you what my personal opinion. Okay, it will be simplified. Okay, just to give you example, do not, whether I should give that example or not, I do not know. But the thing is, see, many of time what happens, there are a lot of deductions they claim on account of donation. Okay, now see, basic aim is to donation, you get a 50% of deduction. Many of time these donations given to the various trusts are bogus. Okay, and therefore they try to get a more of deduction. Now, if you shift from old regime to new tax regime, I'm telling you, there will be a lot of benefits for a department that they will get. This tax evasion will definitely come down. Okay, many of we don't nowadays. Most of these things are being online. They are not. You are not supposed to give any of the proofs and all. Now, for example, ATC Provident Fund deductions are being shown in the our form number 16 issued by the employer, but in respect of other deduction, you can always, give a bogus claim and get it out. such type of thing will get reduced. So according to me, tax evasion will come down. Okay. Which is next now?
So almost I think done.
Yeah, and one girl wanted to ask you what are the write-off and all something. I wanted to.
Yeah. I will ask.
Yeah, just ask her whether she's okay. Fine.
Yeah, Shruti, you are asking about what assets qualify for instant write-off. Any explanation? Any clear? Can you extend your question?
Some sort of elaboration.
Yeah.
Or what she wants to say. Forget about other thing, but what she wanted to know, what is in her mind. So I will also get educated.
Sir Janvi here, Shruti posted her question to me. She has some mic issues. What she's trying to say is in Australia, there is a tax scheme that if you're running a business and your annual turnover is less than 50 million, you can reduce the amount of your business tax by instant asset write-off scheme. So she's asking what kind of assets are included in this scheme.
In Australia, I may not know. Huh?
Yes, sir. So that's the thing.
I'm so sorry. I may not know. I may be more clear on the Indian tax, but Australia, I really may not know. I need to see this all. I don't think so. In India, such type of things are allowed. But any write-off, it has to be. It cannot be allowed blindly. It's not like that. Australia, I need to see.
No, sir. Thank you for answering that.
I'm so sorry.
Yes, sir. So I think almost all questions are done, sir.
Yeah. It was. I do not know whether I was in a position to communicate properly. People understood this, or there are some questions I may not have answered properly because the Australian tax and all I really do not know. But it was an excellent program. Okay, I really liked it. Okay, I should thank your management of their VSIT saying that this was really nicely done. Okay. Good.
Thank you. Thank you.
ICMA is also proud of doing. ICMA is also proud of doing this. In fact, I passed out last 40 years back only. So now it is a lot of difference. Yeah.
Today even the Nandi sir is there at the.
I know Nandi sir is there. I have not met him, but Nandi sir, I don't know, but he's
on the way to the office. Yeah. So he said just within 5 minutes he will join.
Okay. You want me to stay, or I can this thing, or I can join again?
Ma'am, sir, we can continue with the session. Neha will take ahead, and we can till the time I think Nandi sir will join.
Okay.
Thank you. Over to you, Neha.
Thank you, sir, for this enlightening session. Thank you, Abhijit, sir, for conducting the Q&A session too. Now, I would request Professor Hetvi Dedia to call upon Senior Director Dr. Devaprashanna Nandi, sir, from Institute of Cost Accountant of India to address our audience. Over to you, ma'am.
Good afternoon, one and all. Good afternoon, one and all. Thank you, Neha. We have a very special guest addressing us in the session today. It is my great privilege to introduce Dr. Devaprashanna Nandi, who is the Senior Director of Board of Advanced Studies and Research at the Institute of Cost Accountants of India and CEO at ICMAI Registered Valuers Organization, and course director for IS Security Audit, Data Analytics, and Financial Professionals. He has also served the institute as director of examination. He has worked as associate professor of finance, SEMA course leader, and faculty in charge of AMP Banking and Finance at Symbiosis International University, Pune. He is the editor of the ICAI's pioneering publication, The Management Accountant and Research Bulletin. He was the former editor-in-chief of International Journal of Productivity, Management and Assessment Technologies, USA. He is also a member of Board of Postgraduate Studies in the Department of Commerce of Tezpur University. He has contributed to many national and international journals and attended many national and international conferences. He is closely associated with various renowned industry associations. He has authored several books on management, economics, business communication, entrepreneurship, development, and performance management. Talking about his education, he has obtained his PhD in economics as UGC Fellow from the University of North Bengal. He is a postgraduate in commerce from Calcutta University after graduating in commerce with honors from Goenka College of Commerce and Business Administration. He has obtained his MBA degree from the Indian Institute of Social Welfare and Business Management, Kolkata. He is a fellow member of the Institute of Cost Accountants of India and Institute of Valuers India. He is also a member of the Operations Research Society UK and Indian Public Health Association. He has vast experience in industry as well as in teaching and research. So please join me in welcoming Dr. Deb Prasanna Nandi. On behalf of Vidyalankar School of Information Technology, I, Ms. Hetvi Dedia, present you with a token of our appreciation. Welcome, sir.
Sir, you are on mute, sir. Hello.
Okay. Okay.
Nandi, sir, you are on mute, sir.
Nandi sir is on.
Yeah.
Can you hear me?
Yes, sir.
Yes.
Now it is proper. Yeah.
Yeah. So I just joined. So is there anything right now, or I should start? What?
You can start.
Yes,
Oh,
sir. Over to you.
okay.
Sir.
Okay.
Yeah.
Okay. Just a minute. Yeah. So very good afternoon to all of you, and especially this Vidyalankar School of Information Technology for giving us this opportunity to present before you regarding this our CMA course, Cost and Management Accounting Profession, and how the students can be benefited. They can go ahead with their career with this sort of course. Okay. So while they are studying in their graduation level or post-graduation level after just passing their higher secondary course, so how they can be well prepared for this type of course, and this will be a path-breaking career option for this for their future career. So very good afternoon to Kailash sir also.
Thank you.
And yeah, and all the faculty members here and all the organizers. Okay, so I'll just share with you a presentation that is with me about the course and the career, so that the students they can see this presentation, and I will discuss something about the more about the course curriculum and its placement opportunities, its career growth, everything. So I think my presentation is visible. Is it visible, this presentation? Anyone can check and say?
Sir, just, yes,
Yes, yes, it's visible.
visible. Yeah.
Okay, okay, okay. Thank you. Yes. So today's my presentation will be the CMA course going global and mentoring future ready professionals. Why future ready? Because the future professionals, okay, they should be at least future ready so that they can cope up with all this changing global scenario, especially after this COVID situation, that many things has changed. The drastic change is there around the globe. Regarding their in terms of their career options, in terms of their choice of careers, in terms of their various courses, course contents. So that is why they should be future ready and they should be able to cope with all these changes that is coming up. So actually, our institute is an institute which is under the Ministry of Corporate Affairs, and it started its journey in the year 1944. As a registered company, and it got enacted in the year 59. So these are the stalwarts, former presidents and former prime ministers of India. In fact, Lal Bahadur Shastri ji, who laid down our stone for the building at Kolkata, the headquarters of the institute, and they all our former President of India, Pranab Mukherjee, Abdul Kalam ji, they all said about this, why this cost audit, cost accounting thing, cost and management accounting, that is very much useful for the next generation and for the professionals, that they have explicitly said in their lecture sessions, in various sessions in our institute and somewhere. Okay. So this is about the profession. This institute that they take these students in the cost and management accountancy profession, and they enroll for their various courses. This is presently known as the CMA course, cost and management accountancy course. They facilitate students. They organizes various professional development programs and undertake research activities. So I think students, those who are interested in research activities also, they can also join with our organizations, with our institute, for their future, to enrich with their future research interests. Say, for example, the institute already have said that it is under the Ministry of Corporate Affairs, Government of India. Apart from that, it is the founding member of several international bodies like IFAC, International Federation of Accountants, Confederation of Asian and Pacific Accountants, CAPA, and South Asian Federation of Accountants, SAFA. These are all renowned international accounting bodies, where our institute is the founding member of these international bodies. So you understand that the gamut of the institute, that stature of the institute in the global parliament. That is why we have said that CMA course going global. So which already started in the year 1944. It was started during the period of World War II, because at that time that concept of cost plus contract that is coming up. And in 59, it was a landmark Cost and Works Accountants Act. It was enacted with statutory recognition of the Parliament. And then 2012, the name was renamed as the Institute of Cost Accountants of India. The word works has been deleted from the name by the ministry, as because works was limited to the factory. Works means the factory, factory shop. So that has been deleted, because earlier it was perceived as that role of the cost and management accountant is only in the factories, only in the manufacturing sector. But as the days progresses, after the independence, especially after 1991, that liberalization and globalization takes place in India also, everybody understood that costing is not an only element of manufacturing. Everywhere in the globe, any activity, any financial activity involves costing. And that requires cost management techniques to be applied in all those activities to make the organization sustainable and viable for the future. That is why then the word cost, the word works has been deleted, and everywhere in the world else from India, it is known as cost and management accountants of that country. Only in India, it is the Institute of Cost Accountants of India. Maybe in near future, it will be Cost and Management Accountants of India, ICMAI. Already in our website, it is ICMAI. Our members of the institutes, they are known as CMAs, Cost and Management Accountants. So this is the brief historical background of the institute. With that, our mission and vision, it is clearly said that CMAs would be the preferred source of resources and professionals for the financial leadership of enterprises globally. So we would like to reach in the global parlance with our financial leadership, because a leader can be a cost and management accountants can become a very good leader for an organization due to their strategic visions, due to their decision making visions. Because I just want to highlight here. So somebody may ask in some career counseling or some this type of programs, that what is the difference between other financial accountants and this cost and management accountant. So I'd like to mention here that other financial accountants, they are mostly involved in the accounting part, taxation part, that is the day-to-day regular matter. Okay. But the cost and management accountants are having some higher vision or having some strategic vision, that is called the decision-making capabilities are there, as because many of our CMAs, they are now placed as CMDs, presidents, vice presidents, CFOs, chief operating officers, and likewise in the top post places, top-notch positions across the industry, whatever it may be a PSU, public sector unit, maybe an MNC, maybe a corporate, any sort of corporate organizations. Okay, so this cost and management accountants, they are now placed as the topmost leader of the organization. That is why we want to achieve this financial leadership globally, and our members, they are now located across the globe, anywhere in the world, they are now spread out. So with this, we have some basic objectives to a cost and management accountancy function to be a powerful tool of management control, develop scientific methods for management accounting, become a professional body of members, and the latest developments in cost and management accounting principles and practice to be imbibed in this curriculum and everywhere. As well as we want to adhere with the best ethical standards. Ethics is one of the most important things nowadays in every course curriculum. It is their business ethics. So ethical standards should be maintained. Apart from that, research, seminar, conferences, and publishing of books, manuals, that is one of the important objectives of the institute. So the institute's magnitude is like that. It is the largest CMA body in Asia, and the second largest CMA body in the world after CIMA, Chartered Institute of Management Accounting, London. So this is the magnanimity of this institute across the globe, across Asia. So institute in global parlance. And this is the institute network presently. Presently, we are having more than 5 lakh students at various phases of their education, like foundation. We are having 3-tier system. We'll be coming up with that later on. We are having foundation, intermediate, and final stages, having more than 85,000 qualified professionals. That means we have already passed, and maybe many of them are the members of the institutes. Somebody is awaiting membership. We have 85,000 odd members and professionals across the globe. We are having headquarters at Kolkata and 4 important major metro cities in India. We are having offices, 4 regional offices, Chennai, Delhi, Mumbai, and Kolkata. 111 chapters across the country. 11 overseas centers. Our latest overseas center at London, established in 23rd January this year. 2 centers of excellence, 52 CMA support centers, 382 recognized oral coaching centers, and 133 exam centers. So this is the volume of work, this is the network of the institute across the globe, whether it is in India or outside India. So this is the network we are having. So this is the core strength of the CMA profession. Why do we pursue this course? Okay, so if we go by a slide, because each and every topic mentioned here, it may take 1 hour session. Okay, so starting from building cost effectiveness, that is the basic objective of the institute, to enterprise governance, to regulatory landscape, all the regulations, everything, Companies Act, SEBI Act, all the regulations, RBI Act, that is there in our curriculum, in our course content. Management control system is one of the important area. Business analytics and strategy and sustainability. So analytics has come in a bigger way. So we have already started with our data analytics course, advanced Excel course. These are all analytical part. Cost benefit analysis, always the key priority area for the cost accountants. Benchmarking, direct and indirect tax management, one of the important areas. Auditing and assurance, business valuation and product pricing, cost and management accounting, and financial management. So if you can see these 12 core areas, so that is the major areas of our course curriculum, course content, and the opportunities for work and for the profession. So these are the major areas where the CMA profession is evolving around. Okay. So this slide is very important for our discussion, for our future thought process. So very recently, we have got a very good recognition from the UGC, that is the University Grants Commission of India. They have recognized our CMA qualification equivalent to PG degree. This is very important for those who are going to start their PhD program, research program, or something around PG degree equivalence to PG degree for going abroad or somewhere, some job opportunity. So it has been awarded by this University Grants Commission, that in CMA qualification, whether you are a postgraduate or not, that is not a criteria. If you are a CMA, then that will be equivalent to PG degree for this kind of thing. So that has been recognized by UGC. As well as, this is an international body known as NARIC, US NARIC. Okay, so they have also recognized our course as master's degree in UK and UAE. So if you are a cost accountant in UAE and UK, you will be benchmarked as equivalent to master degree, and the intermediate qualification will be benchmarked as bachelor's degree. So this has widened our scope, international acceptance of this CMA qualification around this UK, United States, and UAE, and other states of other countries also for their Middle East like foreign jurisdictions accepting NARIC evaluation. So this evaluation has been widely accepted by all these countries. So this is one of the important, very important global recognitions for the CMA qualification of India. Apart from that, we are having very good MOUs with these organizations like Institute of Public Accountants of Australia, Chartered Institute of Securities and Investments of UK, the Chartered Institute of Public Finance and Accountancy of UK, Institute of Certified Management Accountants of Sri Lanka, and Associate Chartered Certified Accountants UK, SCCA. So these are very important memorandum of understanding that institute is having with them. In some cases, we are having a reciprocal arrangement. That is, if you are a member of the institute, you can easily be a member of these foreign bodies. And some cases, if you go through 1 or 2 papers, then you can easily achieve these degrees, these international degrees, either from UK or from Australia. Okay. So, and few MOUs are on the cards, important moves are on the process, so that the future cost accountants, they will become really future ready professionals with having these qualifications in their pocket. So now we are interested about the CMA course. Most of the students are here, those who are awaiting how the course will be, what are the course content, what are the opportunities, what are the future directions of the course, that we'll discuss very quickly. So these courses are aligned with your employability of the students, how you become an employable professional in the future. So that is the major thrust of the course. So that is why it will increase your earning potential, because our motto is earn while you learn. That means there is no bar. If you work somewhere, if you do some other courses, you can simultaneously do these courses, okay, of CMA course, so that you can earn also while you learn. If again, we are having internship schemes for the students. We arrange internship for the students in PSUs, MNCs, everywhere. If you can see our website, you'll see there are lots of opportunities for the intermediate students, those who are pursuing the courses. Okay, so this is the motto of the course. Okay. We are having actually the course content, the syllabus, the salient features of the syllabus. We develop the syllabus and curriculum in such a way, in a robust way, that it will comprise of all the important guidelines of International Federation of Accountants, IFAC. We take the suggestions from UGC curriculum for different for different universities. Even the state boards and central boards, they develop the curriculum. We develop our foundation level curriculum as per their directions also. But the basic objective is that to make the students future ready as well as industry ready, industry specific. That is why while we devise our curriculum, while we change our curriculum in every 4 years, basically, then we take the suggestions from the industry stalwarts. Our many members are there in the industry. Apart from their members, we are having very good network with the industry people, corporate people. We took their suggestion and we incorporate it in our syllabus so that our syllabus becomes more robust. It basically founded on 4 important pillars like management, strategy, regulatory function, and financial reporting. If you scan all the syllabus content, there will be nothing apart from these 4 pillars. So these are the 4 important pillars on which this our course curriculum is totally based on. So this course can be completed in 2.5 years, starting from the foundation to those who are just completed higher secondary and approaching graduation. They can start with this course 2.5 years. They will have to devote fully for this course apart from your graduation course, and will become a fully qualified CME. You can work somewhere and as well as do this course along with other academic and professional course. You can start it and you can ready to serve in after foundation and intermediate qualified. That means there is no bar in working, and we also give we also create some opportunities for the students, those who are in the institute, for this type of internship and work in the industry. So these are the basic qualification that is required, eligibility criteria for foundation. If you are a class 10 pass or equivalent, you can take admission in the foundation, but you have to appear in the examination after passing class 2. And for intermediate, either you have to pass foundation or there is a CAT examination of the institute, or you are a graduate, that's a direct route, ICSI, old foundation, and qualified engineers are pursuing engineering course. They can also take into admission into intermediate directly, and Institute of ICAI Chartered Accountants of India intermediate students, they can take admission into intermediate. But for doing the final course of the institute, you need to complete this CMA intermediate course. Then only you can be able to start the CMA final course. So this total transition from foundation to final, you need to have 2.5 years of rigorous study, training, coaching, because our course curriculum is not depending only on course curriculum. Course curriculum comprises of training, skill training, practical training, industry-oriented training, assessments, and then completing these courses intermediate final papers. So it's a robust kind of thing. So if you pursue this course properly, if you pursue this course with your wholehearted efforts, will become a cost accountant within 2.5 years of time. So these are the course content. Basically, our syllabus 2016 is going on, and very soon we'll see that new syllabus, which is under process. So every 4-5 years, we used to revise your curriculum as per the industry norms, as per the industry requirement, and the changing scenario in the global parlance. So in the foundation, we are having the course content that is quite similar to your high secondary commerce or just first year of graduation course, like fundamentals of economics and management, fundamentals of accounting, fundamentals of laws and ethics, and fundamentals of business mathematics and statistics. If you see the papers, name of the paper, these are all fundamentals papers, and nowadays this is basically an MCQ based examination. Even from home also during this pandemic, we have started students from home with proctored system of examination, online examination. They can impart this examination, they can give this examination. 50 questions are there, of each questions of 2 marks, 1 hour time will be there for each paper. And within 1 day it will be completed, and within a month the results are published. So this is all about the foundation course, and you have to score at least 50% marks out of total 400 of 4 papers. So, and in each paper you have to score at least 40% to clear that paper. If you score less than 40%, you will be disallowed. Okay, but if you score 40% or more, and in totality 50%, will be completing that particular course. So after that, in intermediate, we are having 2 distinct groups. Each group consists of 4 papers, like in group 1, financial accounting, laws and ethics, direct taxation, cost accounting. So you see, these are the higher grade of the foundation. In foundation also, this accounting, ethics, these are all there. But this is the higher version. Obviously, direct taxation is there. In group 2, we are having operations management, strategic management, cost and management accounting, and financial management, indirect taxation, and company accounts and audit. So this is all about intermediate. Those who are in the graduation stage, they can see many papers have resemblance, at least in their names, with their graduation level, BCom, BBA, or other courses. Okay, so they can see the resemblance. In the final course, this is more of strategic in nature, because cost accounting is not mere accountant, mere an accountant. They are the strategic managers. Okay, so in our course curriculum also, we see the reflection of that. Starting from corporate laws and compliance, all the strategic issues, strategic financial management, strategic cost management, direct tax laws from strategic perspective and international taxation, then corporate financial reporting, indirect tax laws and practice, cost management audit, and strategic performance management and business valuation. So these are all in the final course. So final is obviously some higher standard than the intermediate course, and all the strategic case studies, cases, and strategic views are dealt here. But students with good who are devoting good time and having rigorous activities into this course curriculum, so they surely come out with the flying colors for their future careers. So what are the value-added services we give to the students? So apart from the study materials, we provide all the study materials in each paper to the students. Every time we do some amendments, some supplement that has been uploaded in the website of the study materials, workbook we provide. Students e-bulletin are there in every month for each subject. We are developing knowledge web series, because if you have some standard classes, you can view it in our web series sections. E-libraries are there, our past classes, archived online classes are here. Regularly, we are conducting webinars for the students from their upliftment on course-wise, curriculum-wise. Online mock test facilities are there. You can practice your examination sessions through our online mock test. You can have your result marks immediately, all our mock tests. Many PPTs are uploaded. Even coaching, we provide that coaching, oral or postal. In oral coaching, our chapters, region, support centers are there. They provide direct oral coaching for the students on each topic. We are having skills training, we are having practical training, and industry-oriented training programs. So this is the total value-added services given to the CMA students, and that is included in their course fee. So we'll discuss it later on one by one. So training requirements. So in the intermediate level, we are having World Plus Skills training that has been introduced very soon. We are very lucky that you can grab these skills training opportunities. Practical training is there. Industry-oriented training program in the final level, and practical training you can complete within the final level. So 140-hour skill training we have started, practical training of 15 months, and 7 days industry-oriented training program is there. So these are all part and parcel of our course curriculum right now. So what sort of skills training, World Plus skill training we are providing? That is SAP training of 60 hours. This is basically our SAP Finance Power User course, SAP Learning Hub, and global certification. We provide the certification for the students also. This is there. We are having employability and soft skill training side by side. That is Microsoft education and certification, all sorts of Microsoft thing about PowerPoint and Excel advanced level. So we give 40 hours, and Cambridge University Press soft skill education and training for 20 hours. And apart from that, we are having e-filing certification of 20 hours for the students. That is very important from finance perspective. So this is our skills training. And apart from that, Institute also gives support for another 140 hours, because we are having our live online sessions, recorded sessions, and assignments. So this is given by the Institute. And after the completion of the course, we are having some assessment process, that is also online assessment from home you can give. Your performance is monitored, will be monitored thoroughly, and you are having your online assessment for the skills training. Apart from that, that is very interesting, and this is very important. Our practical training scheme is now for 15 months. So starting from your intermediate, you have to be taken, you have to be in this practical training sessions with some cost accounting firms or some management consultancy or some industry, PSU, corporate sector. We are having a big list of the organizations where it can be absorbed. So basically students, they try for their own for this practical training, but also institute, regions, chapter, they also take that effort to place them in different organizations for this practical training. This is very useful for them to become placed in the future and to become a future ready professionals. Yeah. So apart from that, we are having in the final level industry oriented training program of 7 days. The topics are mentioned here. These are the major outline of this topic, like banking, direct taxes, cost audit, direct taxes, finalization of accounts, bank reconciliation, all the important aspects of this accounting and finance and costing that has been dealt in this industry oriented training program by the expert person from the industry. So presently, this is the statistics. More than 1,15,000 students, they have taken admission during this 2019 to 21. That means you can see even during this pandemic situation, what is the interest level among the students across the globe for the CMA courses. Okay, more than 1,15,000 students, they have taken admission in the course, and more than 1,75,000 students, they have appeared in various levels of CMA examinations during this period. So easily you can see the attraction of the course, the demand of the course, and how the people or the students, they're reacting about the courses, whether it will be an admission level or in the examination level. So there are some misconception about this type of professional courses regarding the pass percentage, but you can see this is the last term, complete pass percentage is like that. Foundation is about 80% students passed in foundation examination, in intermediate around 32-33%. And in the final level, around 25% students cleared these courses. So you see, if you are serious, if you are diligent, if you are having your honesty and integrity about the course, you will get passed within 2.5 to 3 years of time. That means while you are doing your graduation, within that 3 or 4 years time, you can even pass this cost accounting. So after the graduation, you can be a complete cost accountant, and you can come in the campus placement opportunities of the institute. So this is about the course fees. So I am talking about so many facilities, so many international exposures, international skills training, but our course fee is very minimal. If you compare it with the other professional courses, other management courses, everything, you can see our foundation course is only rupees 6,000. Intermediate is rupees 23,100, and final is 25,000 only. Even in the intermediate and final level, we are having installment facility. Okay, that is around 50%, 50% like that. So expending only about around 50,000 rupees starting from foundation to final, you can become a complete cost accountant. There is no other hidden cost even. That means it involves your cost of study materials, your coaching, your learning, your practical training, your all skills training, login credentials, everything is there. So we can say easily that total cost of CMA course is even less than interest cost per annum on loan taken for higher education purpose, and it is the lowest among all professional courses. Okay, so it will not even equivalent to the interest of the loan taken, say 10 lakh, 20 lakhs rupees that the students may take for loan for the higher education. That is even less than that. Even the interest amount is, this course fee is even less than the interest amount. So this is the beauty of the course fee and the course structure and curriculum. So apart from that, we are having various financial aids and scholarship, refund waiver scheme. So presently we are working with these students who are unfortunately lost their parents due to COVID-19 situation. We are having some scheme. We are having some scheme for financial assistance for economically challenged meritorious students, minority scholarship, and government scholarship schemes are there. And now the most interesting part of my presentation, that is the career opportunities of the students. So every students, they want to know what is the career opportunities after having this CMA course. So basically, there are three areas of careers like service, practice, and startups. So in the service, there are two areas, industry and academia, and there are practicing opportunities apart from that, and they can have an entrepreneur or self-employed, they can generate your own revenues. So these are the identified areas of job opportunities, like say, for example, cost management accounting. These are all traditional finance, account, taxation, internal control, project management, business analyst, banking, academy, all these are the identified areas. Apart from that, there are very good areas of administrative services. You know, there is a special service in India government that is known as Indian Cost Accounting Services, ICAS, that is meant for this cost accounting. Okay, that is equivalent to your Indian Administrative Service, IAS. IAS, IRS, IFS, IES, IAS, Indian Audit and Account Services. All these services are open in the central government level for these cost accountants. They are eligible to sit in these examinations, and they can become all this. They can hold all these important positions of these administrative services. Apart from there are in several state governments also this type of state government level audit and account service and other services are there where they can also become engaged as an administrative officer. So the important job roles they have played, that is like CMD, starting from CMD, MD, CEO, CFO, director, head of finance, president of finance, cost advisor, finance controller, business analyst, risk managers, etc. Even in the college, university level, the dean, professors, etc. Okay, so these are very important job roles for CMS. And these are the practicing opportunities. Cost audit is the main area of the institute. The internal audit, that is also there after this 2013 Companies Act. The CMS, they can be involved as an internal auditor. The GST valuation and audits, insolvency professional, registered valuers, loss assessor, surveyor, arbitrator, tax consultants, financial services, information system audit, forensic audit. These are all the important, very important areas where CMS can start their practice after they become a member of the institute. And CMA professionals opportunities for consultancy of services. There are so many areas, starting from financial planning and policy determination, say business data analyst, so strategic positioning and integration, business valuation, total cost management, budgeting, supply chain, inventory, working capital, capital structure, artificial intelligence, integrated reporting in the MSME sector, ERP implementation, everywhere. Okay, we can have our role, prominent role as a consultancy services. So while you are in practice, that means you can do side by side these consultancies. So there is a huge earning opportunities for the cost and management accountants if they are self-employed and they can have their own profession. Regarding campus placement or class placement as such, say in our campus placement, more than 60% students are recruited by public and private sector. Average pay package is rupees 8 lakh, highest package 20 lakh, and in the off-campus placement, 85% to 90% students are placed. And you see in the newspaper everywhere, when there is a government job, there is a job in PSU, big MNCs, always you see the name of CMA, CWA like that. Okay, it is if you open any newspaper any day, there is a financial role. You can see the name of the CMS up there. So this is the beauty of this course curriculum, beauty of this course content, and this is the USP of this CMA course. So this year we are having Havoc campus placement. So these are the companies already they are in the first phase: Accenture, Philips, Vedantu, ITC, ABB, CET, NBCC, EIL, Apex, Invenio, Consaro, Kalpataru, Olam, Lafarge, and many more. Even we have done the second phase, June, July, Deloitte, KPMG, TCS, Capgemini, Biocon, Goldman Sachs, GAIL, REC, L&T, Tech Mahindra, Axis Bank, Kotak Bank, Bank of Baroda, Wipro, Citco, etc. Now we have started with this third phase of campus placement from August, September, October. Yesterday only got the news that in Tata Consultancy Services, they have taken 72 candidates, 72 candidates in various job roles. Okay, they have given us the mail. So this campus highest CTC offered has been 22 lakhs given by Accenture, and average CTC is 10 lakhs per annum, and more than 500 already cost 550 students in this campus placement. It may reach up to 800 students. So this is a huge number of students. They are getting placed in big companies, big MNCs, BSUs through these campus placement initiatives. So these are some examples of who are coming in our campuses, who are coming in the placement initiatives like public sector undertaking, maybe Coal India, maybe SEBI, NTPC, ONGC, Indian Oil. Okay, so series of GAIL, okay, HUL, HEL, HP, RIDES. So many new PSUs, they're joining hands with us this time. Banking and financial services and insurance, many companies are there, Allahabad Bank, ICICI, Axis, Kotak, Max Life. These are all from financial institutions. IT companies and consultancy, ABB, Accenture, Citco, Infosys, TCS, KPMG, they're all coming. Healthcare and pharmaceutical, hospitality also there, like ITC Hotel, Citla, Apollo, Narana Health, Nanavati Hospital. They all coming for our campus placement at various phases. Infrastructure, logistic and automobiles companies like L&T, like Transrail, SEC, Alstom, all these companies, Reliance, they are frequently visiting Tata, and as well as engineering, FMCG and other companies, they also come in their campus placements. Okay. So we are having our Students Connect portal from where we can have your webinar sessions, e-learning sessions, e-library, mock test portal, and others students related e-services that is there. So this part is over about the CMA courses, and now I am having left a few slides beyond CMA course. Those who have already completed CMA course, even those who are studying in the intermediate and final level, they can also do these things. Like in our advanced studies courses, we are having few important courses that is in there, like Diploma in Information System Security Audit, Forensic Audit, Data Analytics for Finance Professionals, SAP Advanced Level courses, Advanced Business Excel for Finance Professionals. In September, our next batch is coming up. In every batch, we take 200 students. Already 120 students have applied for this course. This is very important with Microsoft certification. This course is attached with Microsoft. So this is a very important course for those who are in the graduation level also. We are having course on, this is especially for the members, Diploma in Management Accountancy. We are having course for the engineers, Executive Diploma in Cost and Management Accounting Engineers. So this is the only course in India that is meant for the engineers also for this for Cost and Management Accountancy domain, course on arbitration and course on valuation. Apart from that, we are having many taxation courses like TDS, GST, tax filing, okay, for university and colleges, etc. So GST audit, income tax assessment. So these are the courses on taxation. We have few courses, important courses on banking and financial services like concurrent audit, like credit management, treasury and international banking, and investment management. So these are various courses. Apart from that, we are having two important companies under the banner of the institute. One is the valuation company known as Registered Valuers Organization, very important wing of the institute, which is recognized under Insolvency and Bankruptcy Board of India, IBBI, and another company is known as IPA, Insolvency Professionals Agency. So these are two very important professional development area, professional avenues are there for the members of the institute. They can complete these two types of different courses. These are our institute network. So through 111 chapters, we proceed from Western Zone, Southern Zone, Eastern and Northern Zone. So this is our chapter network across the India, and these are the regional centers. Here in the Western India Regional Council, it is Rohit Chamber at Port, and likewise Southern Zone, Eastern Zone, and Northern Zone also we are having their own centers. And these are all our overseas centers, 11 important overseas centers: Canada, Washington, London, Dubai, Bahrain, Nepal, Muscat, Tanzania, Zambia, Botswana, and Singapore. So these 11 overseas centers we are having. Through them, we are going global. And so be a CMA, be a proud Indian, be an enabler for self-reliant India. So thank you to all of you. I think I am over with my presentation. So I think it is visible and audible to you, all of you. And if you have any questions, I can take it up. Thank you, organizer. Please, I just stop share my presentation.
Thank you, sir, for enlightening us with your words of wisdom. If anyone have any questions, so they can post it on chat box. Now I request Professor Hekpi Dedia for delivering the vote of thanks.
Thank you, Neha. Today, I'm reminded of a quote by Zig Ziglar. The more we express gratitude, the more we have in life to be grateful for. It is my great privilege to express gratitude on behalf of everyone to CMA Kailash Dabholkar, sir. Thank you, sir. I am very humbled to learn more on alternative tax regimes. It was an insightful session, leaving us with a lot of clarity. We look forward for many more such sessions to come in future. I would like to thank our beloved principal, Dr. Rohini Kelkar, and Vice Principal, Mr. Vijay Gavde, sir, to whom we shall forever remain grateful to encourage us in every endeavor. My heartfelt thanks to Dr. Lakshmi Kavita ma'am, our Chief Academic Officer, for providing us valuable direction for conducting this symposium. I would like to extend my gratitude to Institute of Cost Accountant of India for supporting and collaborating with us for this event, and my special thanks to Dr. Deb Prasanna Nandi for gracing us with his presence and addressing our participants today. I would also like to thank our enthusiastic HOD of BMS department, Mrs. J. Gunasundari, for taking up the initiative to conduct this international symposium. My sincere thanks to the entire BMS faculty members and the motivated, innovative, and dedicated management club Enactus for working relentlessly day and night to bring an event of this dimension to success, the preparations of which had started months in advance. Last but not the least, I thank each and every student and faculty participant from VSIT and other colleges for their enthusiastic participation. Thank you. Over to you, Neha.
Thank you, ma'am. Now I request all the attendees to switch on their camera for photo session.
Thank you, Neha.
The feedback form link is provided in the chat box. Please fill the form as that would record your attendance for the session. I also request all the attendees to submit the assignments provided before 12 a.m. as these assignments will be considered to provide graded certificates. Also, we would like to inform you about Management YouTube channel Knowledge Bites. It is the channel of VSIT BMS students which provides a platform to get updated with management trends. Kindly watch, share, and subscribe. So let's meet tomorrow at same time on same platform with our other dignitary, CMA Yogesh Gadre, who will be talking about ERP system for accounting. Thank you, everyone.
Thank you, Kailash sir and Nandi sir, for being with us.
Thank you, madam.